Hey, what's going on, guys? So on Friday, I made a video saying prepare for Monday, and it looked like over Sunday evening, people were preparing for what was to come today. And Bitcoin went from 102,000 to 106,000 and some change Sunday night. Monday, we got a report from Moody's ratings that the United States ratings dropped a little bit, which this indicator is actually a lagging indicator. So people had already priced that in. So it didn't really affect us much today. The price dropped a little bit, but look we're back up at 105,000. So people are getting ready. There's a couple of big US bills that are going to be paid. The Bitcoin market structure bill, which is going to open up the floodgates for banks and institutions to come in. And then we got the stablecoin bill that's going to be passed anytime now. So stablecoin bill should be passed any week now. And then the market structure should be passed sometime in August. So I think we're at a race for, parabolic third leg of this race all the way up till the end of the year. So you're going to have a little bit of volatility up and down, maybe 3 to 5% along the way. But once we get up to like 150,000, we may have a drop down to 110 again. But by the end of the year, we should be looking really good. So look at this other chart that's in the video saying how much institutional money is going to be coming in with this little bit amount of Bitcoin left. So do your research, look up these bills, and invest wise. God bless. Take care. Protect your family. Peace.
The reason we're seeing such big volatility to start this week off is because Moody's, a global financial ratings and risk assessment company, just downgraded the United States credit rating from AAA to AA1.
Credit ratings agency Moody's downgrading U.S. debt to AA1 from AAA over the weekend. The agency citing the budget deficit and rising interest payments on government debt in a high interest rate environment for that cut.
This means that the U.S. has lost its top-tier credit rating from all three major credit rating agencies, including Fitch Ratings, S&P Global Ratings.
Standard & Poor's downgraded the United States back in 2011. Fitch cut the U.S. rating to back in August of 2023.
These two had previously already lowered the U.S.'s credit rating from AAA to AA1. All this is causing a lot of turmoil and whiplash in the markets. Do not be fooled. Look at what's really happening. Let's talk about what's really going on and what comes next for Bitcoin and crypto. Because all of this sounds bad, and obviously it's not great, but this really isn't that big a deal, and I'll tell you why. It's really more of a lagging indicator, and one that was actually already pretty much priced in since the other two credit ratings did this years ago. And think about it. Long term, this is actually good for Bitcoin as it opens up the doors even more to a non-sovereign reserve asset like Bitcoin. But obviously, this is a negative headline, and all markets saw volatility because of this. Fundstrat's Tom Lee, though, also says, guys, this is not a huge deal. This is actually a buying opportunity.
I don't know if there's much signal in the downgrade Friday because I think the first AAA downgrade was signal from 2011. I don't think Moody's had any information that we didn't have on Friday afternoon. So I think markets should realize the bond market largely priced in the fact that the U.S. is really not AAA anymore. So I'd be viewing this as a buying opportunity.
Higher highs are coming, at least according to Fundstrat's Tom Lee. He's speaking about the stock market here, but we all know how insanely bullish he is on Bitcoin and crypto. So listen what he says carefully. This is what comes next, according to Tom Lee.
So we reclaim the 200-day. Is that a clear path to a new high, as some of the trading desks suggested this morning?
Yeah, in fact, I think today will be an interesting test. I'm assuming today's pullback's going to be really shallow, might even close positive, because most investors rage sold at the bottom in April, and then they Doubted.
Rage. I hadn't heard that.
Yeah.
That was a good. That's a good one. Is
Yeah,
that
I
your
think-
own, or have you heard that other place?
I've heard that. Yeah.
Rage sold.
Yeah.
Sorry. Go ahead.
And so as the markets climbed, a lot of people sort of doubted, thought it was a rally that would fail. And so I think there's $7 trillion cash on the sidelines. Enormous skepticism from our institutional clients, and a lot of folks sort of bet outside the U.S. So I think there's going to be a lot of chasing into year-end.
And we can be even more bullish on crypto markets for two big reasons. Two big legislation bills are about to get passed. These will open up U.S. markets to crypto and bring insane capital into the space. I'm most looking forward to this one, the Market Structure Bill. This bill aims to create a comprehensive regulatory framework for the entire digital asset market, including exchanges, brokers, other intermediaries. It will define what digital assets are, what jurisdictions they fall under, the SEC, the CFTC, and clarify their respective roles. This will be huge for the crypto space since the US is the largest capital market in the world. They're aiming to get this passed by August. Now, the stablecoin bill, which will also bring insane capital into this space, this might get passed very soon, in fact. It actually failed a week or two ago, the first time in Congress. They're attempting another pass.
Understanding how this bill works and what it does. What is it?
It basically establishes a legal and regulatory framework to issue stable coins here in America. Stablecoin, stable meaning it's backed by a certain currency. In this case, it's tied to the US dollar, but also it's backed either by
This Japanese trick with orange and cinnamon will stop your blood sugar spikes for good.
cash or by short-term US Treasury.
And what this will pass, Senator Bill Hagerty is one of the, and what this will do and what to expect with this.
So, but in terms of just understanding how this bill works and what it does, what is it?
It basically establishes a legal and regulatory framework to issue stable coins here in America. Stablecoin, stable meaning it's backed by a certain currency. In this case, it's tied to the US dollar, but also it's backed either by cash or by short-term US Treasury securities. So it's entirely safe. Having that type of regulatory framework and disclosure around it so we know exactly what's backing up these digital dollars, if you will, is going to be great.
Think about how bullish this will be going forward. Understand what a stark change this will bring, especially from the way things used to be.
Because what was happening before was the SEC would issue something that basically just scared people, wouldn't tell them what works. They would go after enforcement actions after things that they didn't like,
Becky.
and that left the entire industry saying, what are we allowed to do? What are we?
Because crypto is a technology, plain and simple. Stablecoins are a payment system technology, plain and simple. It would be a mistake not to invite a better technology to thrive in the U.S. Senator Bill Hagerty explains here.
This is a payment mechanism, and not to be confused with Bitcoin or something that has a speculative component. This puts us into a digital payment framework, the fastest rails available, much better than the system developed in the 70s and 80s, which is slow. It takes days to clear.
So understand the floodgates are about to be opened. You can actually say they've been becoming opened probably since BlackRock launched their ETF in 2024 or when President Trump got elected and started doing the things he's been doing in 2025. But they're just barely opened. They're just about to become fully opened. Think about this. 95% of all Bitcoin is already owned, yet 95% of investable money still doesn't own any Bitcoin. I'm not sure who might